Welcome back to the Market Minute, where we cover the basic market components to impact your investments and also what you might expect when purchasing or financing a property right here in Florida. Let's jump right in. It's been an interesting week. It's Friday, the 16th of September, 2022, and we've got little news today as far as impactful investment reports. However, the consumer sentiment report that came in was pretty much in line with estimates, didn't impact the markets heavily either one way or the other. However, this week we've had definitely a shock to the markets. The Dow Jones, the S&P 500, the Nasdaq, all down 5 to 7% as I speak. So it's quite an impact there as investors go to other safe securities and bonds, that type of thing. So right now, the 2-year Treasuries yielding about 3.9%, the 1-year Treasury a little higher than that. So that's what's called an inverted yield curve. The 10-year Treasury is about 3.44. So short-term investments in the bond market are yielding more than a longer term, which is usually the opposite way around. So we want to make sure that you understand that's a signal towards a recession. In other words, people want to get the short-term investments believing that long-term rates are going to come back down. That's the bet. Also, in mortgage news and real estate news here, certainly in Florida, homes are still selling. The market's still okay that way. It's still a seller's market, technically, where homes are being sold on average less than 30 days. However, we see the long-term view in interest rates as far as mortgages are concerned. We see a ceiling right at about 3.49, 3.5 on the 10-year Treasury, which is a guide, and it's a really important marker as far as that ceiling of support there. So we bumped up against that in mid-June. We're right there again with interest rates right in the low sixes right now, an average mortgage rate across the U.S. So that is really important to hold. If that breaks through, then we'll see interest rates go a little further up, possibly to 6.25, 6.5. I don't see that happening. However, it's something we need to keep an eye on, because if it breaks through the 3.5 ceiling there, it could run on us a little bit. So bottom line, if you're in a short-term situation, you're purchasing a home and you want to close in the next 2 to 3 weeks, it would be prudent to lock next week early and take a look at that and what that might mean to you as far as closing costs. However, if you're looking longer term, you have a new build, new construction, and you're out 3 or 4 months, we believe the long-term view in mortgage rates, it should settle back down below 6%, certainly. And shortening up that lock period will help you as well. If this information was helpful today, drop a like below. Again, my name is Brent with Unitas Lending, and this has been your Market Minute.